Welcome. We're just going to give it a minute or so. Welcome, everyone. We're just going to give it a minute or so. Okay, welcome, everyone. Thank you for attending the Navigating Social Security for Entrepreneurs and Small Business Owners, brought to you by SCORE Staten Island. We are a nonprofit here on Staten Island, and our mission is to foster vibrant small business communities through mentoring and education. I'd also like to make a special thanks to Flagstar for help sponsoring today's webinar, and a very special thanks to Brian McCarthy for putting on today's presentation. Can you go to the next slide, please? So today your line will be muted. Please use the Q&A versus chat. Please keep your questions to general questions. If you have very specific questions about your own personal situation, Brian is leaving his contact information, and he'd be willing to help you out with your question. A copy of the slides along with this recording will be sent to all attendees. And there's going to be two brief surveys today, one from SCORE and one from Brian. These surveys help us help you, so please take the time to complete them. So with that, Brian, please take it away.
Thanks for that, Gina. And just a little bit about me. As Gina mentioned, I'll be doing the content today. I've been in the financial services industry for 20 years. As you probably saw, I'm a CFP, a certified financial planner. Means that I help my clients in all forms of different content and support with regards to their financial planning needs. And we're very excited to be talking to you today about what is a very hot button topic with Social Security, and to see if we can go ahead and offer you some insight, some education. And so let's just go ahead and jump in. We have a number of partners for this presentation, and this one is brought to you in part by SOFA, which is the Society for Financial Awareness. Please feel free to use that Q&A portion as much as you can. Normally, when we do these presentations, it's live and in person, and I like to create a dialogue because no one, especially me, wants to hear me talk for 1 hour straight uninterrupted. So Gina will go ahead and be asking your questions throughout. And as she mentioned, if you're asking something to your specific circumstance, we will be more than happy to set up a consultation with you. If it's more broad view and overview based, happy to go ahead and answer it as we go through, but please feel free to keep that Q&A box full and active and engaged. A little bit about SOFA. They're another nonprofit organization founded over 30 years ago as a 501c3 with a specific goal to end financial illiteracy one community at a time. So happy to be offering this education. We're grateful for their partnership. Important to note that SOFA themselves do not offer any financial products. They do not promote any one company. I may mention a couple things throughout this conversation about where you may want to take a look at different things, but SOFA themselves are not endorsing them. And as part of the follow-up, you will be receiving, as one of the evaluation forms, is one from SOFA to go ahead and give feedback. A little joke is that the one feedback that I can't fix is you cannot have a more handsome presenter, both because that's impossible, and B, there's only so much I can do with working with this. But any feedback that you give on this presentation always helps us make it better for future dialogues. If you have any question, whether it's regards to this presentation or anything else related to financial planning, I'll leave this up for a second in terms of making note of my email, my phone number, or when you get a copy of the presentation, you'll actually be able to click and set an appointment with me via Zoom. So I'll just leave this here for just about 10 seconds so that you can make note of that. Okay. And then last but not least, just one more compliance disclosure. In part, our partnership with SOFA was driven by our compliance officer, a gentleman by the name of Dan Engelhart. Dan's unfortunately under the weather and won't be able to make it today, so I'm presenting for you on his behalf. But we're very excited for this partnership, and we're grateful for Dan for bringing us together. So let's start and dive right in with the basics of Social Security and a little bit about its history and its origins. Okay. So the first picture you're going to go ahead and see on your screen is actually the famous picture of FDR signing it into law. And you'll notice there's a woman in black standing directly behind him. That's his Secretary of Labor, Frances Perkins. FDR had tasked Perkins with coming up with a program to be able to provide seniors with a dignified existence beyond their working years. And in the most American way possible, she went ahead and put a plan together and used basically what was the 1930s, 1940s version of ChatGPT, and actually took it from an existing plan that was put into place by Bismarck in the 1880s in Germany. So a little bit about Social Security, as you're probably aware of, as many of us have paid into FICA taxes, it's a pay-as-you-go program. Okay, so there's no additional borrowing of funds that goes ahead and supports it. And over the years, the program has added numerous benefits, several of which we're going to go ahead and talk about today, as well as additional supplements. And we're going to go ahead and concentrate on how it works from a filing perspective and with a tilt toward business owners. Again, as these programs have evolved, it's really been such a cornerstone of a client's financial plan. So, first rule, and I believe that most people know this, but Social Security is based on a monthly retirement benefit. And depending on when you claim it, your benefit will go ahead and rise with age. Okay, so how does this have an impact on you? So most people go ahead and take a look at what is their full retirement age. This is the age at which you may apply for a full unreduced Social Security benefit. Okay, now I want to be clear, a full retirement age does not mean the date at which you retire. I always tell the story of my wife's boss, who is approaching 80 years old, and he works more hours than pretty much anyone in his firm. And he's been on Social Security for about 10 years now. But the full retirement age is the age at which they designate that you will get an unreduced maximum benefit. Okay. Claiming before you reach full retirement age has a reduction, which we'll go ahead and show on the upcoming slide. And claiming after this age goes ahead and creates an additional benefit. Let's take a look at what this means for you. Okay. And I'll give everyone a second to take a look at when your expected full retirement age. Most folks, I imagine, on this call are going to be like me in that 1960 and later. I know, hard to imagine. In which case, full retirement age is set at age 67. But if you're born before then, it's anywhere from that 66 to 67 range. Okay. So that monthly benefit is called a primary insurance amount. Important to note that this is not insurance in the same way as life insurance, health insurance, disability, car insurance, things of that nature. It's just what they call the name for the monthly benefit amount. You can first claim it starting at age 62, okay? And the maximum benefit for someone age 62 as of last year was just under $4,000 a month. So it's a pretty significant impact for someone's, usually for their retirement plans and how they go ahead and supplement their retirement needs. Jumping into that, the consequences of filing before your full retirement age. Okay. And I'm going to be basing everything off of the age 67 number, as that's what usually tends to be where folks align. These ratios are a little bit different if you get into that 66 and 2 months and 4 months and so on and so forth. But the age 67 is where most folks fall today. And it's important to note that if you apply at the first available opportunity, you will only receive 70% of your full projected benefit. Let me put this in different terms. If your full retirement age primary insurance amount is $2,000 per month, okay? If you claim that benefit at age 62, you'll only receive $1,400 a month. And that benefit is permanently reduced. Okay, there are cost of living adjustments, which we'll talk about in a couple of slides, but that benefit has a permanent reduction. You never get that 30% back. So it's important to understand what your options are and when you can go ahead and claim. Okay, conversely, if you go ahead and wait to hit your full retirement age or go beyond your full retirement age, there's actually an additional incentive for delaying. It's 8% per year, so that at age 70, if you wait till the last possible moment, you'll get up to 24% extra in your Social Security benefit. Using that same $2,000 a month example, your monthly benefit is now permanently increased to approximately $2,500 a month. Now, I want to just pause for a second and just say, this is not advocating to delay and wait for Social Security, and that's the only way to go ahead and take it. Depending on everyone's individual situation, depending on how you're operating as a business owner, depending on your working years, depending on your income levels, there may be all sorts of different reasons as to when and why you would collect Social Security, but it's just important to understand what that impact is of taking early versus waiting to go ahead and collect. Okay. And I did see one question already in the chat about some of the government proposals. Let me finish up these, and then I'll get to the section. I'll talk about what those some of those government impacts are. Okay. So, as part of Social Security, one of the things that they've added on is cost of living adjustments. Now, one of the hot button topics in the financial realm the last 3 or 4 years has been inflation. It's important to note that the Social Security cost of living adjustments do not keep pace with true inflation. Historically, over the history of Social Security, it's only averaged about 2.4%. Last year was 3.2, which is on the higher side of it. But it's just important to understand that when you go ahead and declare your social and file for your Social Security benefit, those cost of living adjustments are done on that permanent amount that you establish. So using my first example, if you claimed early and your monthly benefit is $1,400, your cost of living adjustment is on $1,400, not the $2,000. Conversely, if you waited and got that $2,500 a month benefit, your cost of living adjustment is on that higher amount. Okay, so it's permanently locked in. Now, I want to take a second to go ahead and just say, and this ties exactly into the Q&A about where we see what's going on within the government. The government changes, many of which are pushing seniors to now file online. If you have not looked at your Social Security account statement, these are the websites that you can go ahead and take a look. You can go to socialsecurity.gov/myaccount. By the way, you do not need to be approaching or filing for Social Security. I've actually done it for my own Social Security benefit as I've looked into it. You can also access several calculators and planners. One important note, that those calculators and planners do not include cost of living adjustment projections. The calculators that we use in our software do account for that, but there are a number of different tools and benefits, so I highly encourage you to go ahead and sign up for that today. Now, to answer the question in the chat as for what we believe the impact of the Trump-Musk proposals are going to have on Social Security. So let me just get to a couple of different things, and they all tie in together. I'm trying not to go all over the place, but there's so many moving parts to this. Okay. One of the big things that is going to be looming over Social Security is that the trust is set to expire at the end of 2033, right around the 2034 range. It's important to note that that does not mean that Social Security itself is going away. If there are no changes to Social Security and we keep everything as it stands, we are projected to be able to fund around 75% of existing benefits without any change, without any pushback. So those already claiming or about to receive Social Security would at least have that 75% met. My personal opinion from what we have started to see, and as you look at various news organizations, Social Security seems to be the one red hot button topic that even as they make incremental changes, such as this now push to a digital initiative, reducing some of the staff in some of the Social Security centers, it's still not shutting down the program. It is such a vital entitlement program and has historically been a red line that no politician ever wants to cross or eliminate. Do I believe that we will be moving towards, say, a later full retirement age? Do I believe that some of the adjustment provisions that go through and maybe some of the other on the scale provisions will have an impact? Absolutely. What those look like, we haven't seen legislation come into law. As we see different bill proposals, we'll have a better handle as to what that's going to look like and what those changes are. But I imagine just from what we've seen when they announced Secure Act 2.0 during the first Trump administration, which raised the required minimum distribution rates to age 73, that as we live longer, which we'll talk about later on, it's almost certainly going to have an impact on Social Security. I personally believe that my full retirement age will not be 67, and thankfully I want to continue to work anyway. But I imagine that my full retirement age, I wouldn't be surprised if it actually started at 70 when I approach that point. Okay. Basic rule number 2, the spousal benefit. Okay, so this was introduced back in 1939. The spousal benefit was really designed for non-working wives to be able to have some benefit off of their husband's work. Now, it's important to note that Social Security is a gender-neutral program, right? We're just going back to what the culture of the country was, 80, 90 years ago at this point. But it's simply based on the amount of money that's being contributed from a household perspective, okay? So again, it doesn't matter how you're married, how it's declared. What matters is that you're married, and we do a calculation based on the credits earned for Social Security purposes. Okay, so let's go ahead and talk about what that means and how that operates. Okay, at a minimum, a spousal benefit equals 50% of the primary earner's monthly benefit amount. So going back to my original example, if the working spouse earned a $2,000 per month credit, the spouse is automatically entitled to $1,000 per month at their full retirement age. Just like with the traditional Social Security benefit, if you claim early as age 62, there is a reduction, and there is no benefit to delaying that credit. So if you know that a spousal benefit is going to be the right option for you, you should file at full retirement age and claim that benefit immediately. Okay, so I'll repeat that. If you know that the spousal benefit is going to be your route to Social Security, once you hit full retirement age, you should go ahead and claim that benefit, and certainly no later, because there is no benefit, there is no enhancement to delaying that credit. Okay. So just to put that into an example, we have Jack and Jill. They went up the hill to go file Social Security. Jack's primary insurance amount is $2,000. Jill's, based on her working record, is $800 per month. But because she's entitled to a spousal benefit, it goes ahead and gets increased to $1,000 per month. So she actually gets an enhancement as part of that being married. Okay. On the flip side, let's go ahead and say that Jill's primary insurance amount is $1,500 a month. In this case, her own personal benefit is going to exceed the spousal benefit, and therefore the spousal benefit does not apply. One thing I will highlight is that Social Security is very helpful, which I know is a crazy thing to go ahead and say about most government offices, insert, DMV joke at this point, but they're actually very helpful at looking at your profile and figuring out which is the best method and which is the best calculation for you and your spouse, should you be ready to go ahead and declare. Okay. They're very transparent. They want to help you optimize the benefits. Probably the reason why we're burning through so much money. We'll talk about a couple other scenarios later on as to why that might be the case. But in this case, they will give you the benefit of the doubt and give you the higher amount. Okay. So if you take nothing away from what we're going to go ahead and talk about, I want you to really dive into this example. Okay. So in this one, we show a married couple, Bob and Betty, who are currently 60 years old. Bob's earning $3,000 a month. Betty's earning 18, or excuse me, Bob's Social Security benefit is $3,000 a month, and Betty's Social Security benefit is $1,800 a month. And that's their full retirement age amount. We create a hypothetical life expectancy for them, 85 for Bob, 95 for Betty. Okay. And when we do these in person, I poll the audience, and if someone wants to go ahead and either throw into the Q&A a quick answer, when should they claim Social Security? What do we think that they should opt and select to? Should they just instantly file at age 62? Should they both wait until age 70? Should they only wait till full retirement age? And I'll give everyone, just about 10 seconds to go ahead and process that. Now, let me go ahead and throw in a little bit of a teaser. What if I told you that the difference in filing strategy could be $500,000 difference, $600,000 difference, depending on the couple, could even be $1 million difference? Okay. Well, let's just break down some of the examples. Okay. Now, it's not a shock that if Bob and Betty claim early, they get a permanent reduction in their benefit, and their total lifetime benefit is about 1.7 million. By the way, how crazy is that to think? It's if I told each of you on this call that you actually had something on your balance sheet worth over $1 million, you probably wouldn't necessarily believe me, but your Social Security benefit is that valuable. Okay. If they wait till full retirement age, we bump that up to 2.1 million. If we wait until age 70, it's almost 2.4 million. But this was the one, and I'm a very analytical person by nature. We have Betty claiming early, so the lower earning spouse claims early, and the higher earning spouse delays their credit. And there's not a significant difference dollar-wise between the two. It's about $100,000 difference, which, I mean, that's not nothing, but it's interesting that Betty's able to get her cash flow early on and that Bob can maximize his cash flow. Again, I'm not making any recommendations that scenario 1, 2, 3, or 4 is the best or the worst option. There's a number of different things. I always use the example of my wife and I, we just recently crossed into our 40s. I'll be 42 in a couple of weeks. She'll be 41 later this year. And we have this ongoing joke about that. On my side of the family, there's significant longevity where everyone lives well past 85 into their 90s. And on her side of the family, they're all gone before their age 70, right? And that's a big factor into deciding when you wanted to go ahead and take Social Security. Although I will tell you a funny story later on about what can happen if you go ahead and claim too early and some of the consequences of that. So again, I just want to reiterate, there's no right or wrong answer because we don't have that crystal ball to go ahead and say this is the optimum time for you to go ahead and get the most amount of money. However, just know that there's a number of different strategies. There's a number of different ways that we as a financial planning firm can go ahead and help you maximize that benefit and make it a complete part of your financial plan. Okay. Next, a divorced spouse is entitled to spousal benefits. Okay, so it is not uncommon in today's day and age. I think what's the stat? Someone hold me to it, that around 50% of all marriages in some way, shape, or form end up in a divorce. So it's one of those components that we have to think about and have to understand how it impacts our planning situation. Okay, now there's a couple of check marks that need to occur. The marriage has to have lasted at least 10 years or more, and you cannot be remarried. So if you're on that second marriage, they go right back to that married spousal benefit. If you still remain unmarried, you can go back into the divorced spouse. Okay. The ex-spouse needs to be at least 62, And important to note that if the divorce was more than a couple of years ago, you do not have to get the other person to file for the benefits, because we recognize that while some divorces do end amicably, many do not. So we have to be thoughtful in that approach. One of the things that we always go ahead and talk about in this, beyond just the divorced spouse, is that more than one ex-spouse can receive benefits. So if anyone's familiar with Johnny Carson, and admittedly, Johnny Carson was a little bit before my time. I got to be more of a Letterman, Leno kind of guy growing up. But Johnny Carson, lucky in life, not in love, was married 4 times. Okay. 3 of his 4 ex-spouses were eligible to claim Social Security off of his benefit. And I always chuckle that his second marriage lasted 9 years. And so therefore she wasn't able to go ahead and claim on, if she just held out for another year, she would have been able to claim on it as well. But multiple spouses can receive a benefit on the same worker. So for those who, maybe have built up a business, and again, lucky in life, maybe not lucky in love, just know that those benefits will apply to the ex-spouses. Now, there's no reduction. So it's not as if it's this group pool of, hey, we have $4,000 a month when spouse 1 gets this, spouse 2 gets this, spouse 3 gets this. It's not how they work. It's a simple entitlement just based on that marital record. Okay. And they're able to go ahead and do it. And that's another one of my jokes, is given the rate of divorce currently in the country, maybe that's another reason why we're depleting the trust as we are. But in all seriousness, the point from a planning perspective is that if you are a divorced spouse, you may have an opportunity to go ahead and claim on a higher benefit. Again, the Social Security Administration will give you the higher of your divorce spousal benefit or your own primary insurance amount. Okay. Widows and widowers also receive survivor benefits. Okay. So this is where things get a little less basic, and there's a couple of different moving parts. Some of you may have even that you may know someone who's receiving this type of benefit, or may have received this type of benefit in the past. But again, it's an important concept within the financial plan that we have to go ahead and think about. Okay. So just a couple of key points. In order to be eligible for survivor benefit, couples have to have been married at least 9 months prior to the date of death, with the exception of an accident. My business partner and I always make the Anna Nicole Smith joke, who married, unfortunately she's no longer with us, but she had married that Texas oil tycoon who was, 96 years old and was married, and he passed away. But the marriage had to last at least 9 months for anyone to go ahead and get any level of benefit. Unlike the primary working insurance amount, survivor benefits you can claim as early as 60, or if you're facing a disability, as young as 50. Okay. The survivor benefit is not available, again, if there's a remarriage before age 60 or 50 in the case of a disability, right? So again, that same rule, that if you are in a marriage, we go off of the spousal benefit. Okay. And the divorced spouse is available if a marriage had lasted at least 10 years in terms of that survivor benefit as well, right? Which goes back to that Johnny Carson scenario. So this is a lot of moving parts. By the way, here's a little fun fact. I always make the joke, my wife is a CPA. She's an accountant by trade. And every year she gets the physical hard copy of the US tax code. And it's these big, giant phone book volumes, 6, 7 tomes of information. The Social Security rules and regulations is actually twice the size of the US tax code. It's about 13 or 14 of those big, gigantic phone books. So there's a lot of moving parts, a lot of different things, but just to give an overview of how this can apply to you. Okay. So one of the common ways in which we utilize the survivor benefit in a planning perspective, and this goes back to that Bob and Betty scenario, where why we had so much money because Bob delayed, is because Betty was taking advantage of that survivor benefit. So taking a look at this one, we have Joe and Julie. Joe's using that $2,000 a month standard that we use. Julie's is $1,200. Once Joe passes away, Julie doesn't get the double dip, but she now gets a step up to Joe's benefit of $2,000 a month. Okay. And we highlight, by the way, if Joe had waited till age 70 and really maximized his benefit, Julie's survivor benefit would have gone up even more, right? Would have hit that, close to $2,500. So again, another one of those things that we take into account as to when you may want to take Social Security, how it's going to go ahead and apply, and where it really makes a difference. Okay. Couple of keynotes for maximizing the survivor benefit: the age at which the deceased spouse claimed their benefit, right? So I was talking about that before. It's maximized at age 70. And the age at which the widower claims the benefit. So just like everything else, there is a permanent reduction if you claim before your full retirement age. Okay, there's a reduction if you claim before your full retirement age. So again, it's important to note, it is just one of those moving parts of Social Security that is really important to know. Okay. So one of the things that we talked about, and again, we kind of alluded to it in terms of why there's an advantage to waiting. Our blanket recommendation is that the higher earner delays their benefit. Okay. That's how you're really going to go ahead and maximize the long-term income, as opposed to, and believe me, I'm going to get right into this next slide. I'm going to share a very personal story in how claiming some of these early benefits can go ahead and backfire on. Okay. So not only do you get a permanent reduction if you go ahead and claim early, and this is really important if you're a business owner. Okay. If you claim before your full retirement age. So relating to that question that was in the chat about what do we see, what's happening within the government changes, what's happening with all these different pieces. I want to go ahead and claim my Social Security now so I can get my money. There is an absolute chance that your benefit will be reduced. Let me share with you a story. So my father was a teacher for, it's called 40 years, somewhere in that range. He got a pension, and even in retirement, he ran a side hustle. He runs a surprisingly profitable summer camp program. Okay. So he, like many of you on this call, he's a small business owner. Okay. And he's asking me now that he's retired, he's like, Brian, you do this for a living. Yes. You sent me to school for it. I've studied, I've been doing it for a little bit now. And he goes, what should I do? And I go, well, between your pension income, which creates a tax liability, which we'll talk about later on, and your small business that you run on the side, you're going to have a significant reduction in your benefit. You may want to go ahead and wait to claim it. My father grew up in the great state of New Jersey, so you can imagine that there was some colorful language that was inserted in between, but I'll get it down to it, which is, it's my money. I'm going to go ahead and claim it now. I said, you probably shouldn't do that. His response was, well, I'm going to go ahead and die anyway, so I want my money today. Fast forward 12 months from when he claimed, he has to now file his taxes. And he looks at it, he goes, why do I have to give all this money back? What's going on? And I said, hey, Dad, remember that side hustle that you make money on, right? There's a reduction in your benefit. We'll talk about the specifics on the next slide. Remember those taxes I said because of your pension income? Yeah, that's coming out of it. Insert colorful language tirade. He sends the money back to the government. By the way, he's now in his mid-70s, still alive and kicking. His plan backfired in terms of that. So I'm very, very cautious of what happens within these earning tests and these benefits. So as a business owner, if you're continuing to work, or if you're possibly looking at Social Security as an additional income, just know you're going to get faced with the annual earnings test. So the annual earnings test just simply means if you earn over a certain amount of money. Now, important to note, pensions, retirement account distributions, annuities, things of that nature do not count toward this, but traditional wages and work over that $23,000 amount that we have listed here will result in a dollar reduction for every $2 that you earn. So let's put it in a different way. If you're earning around $50,000 a year, okay, and you file immediately for Social Security, let's say you get that $2,000 a month benefit, okay? I'm just doing some simple math here, but roughly you're earning about $26,000 over the amount of this 23,000 threshold. That means your benefit's going to be reduced by $13,000. Okay. So you're basically giving back half of your Social Security income. Now, one important thing to note about the annual earnings test is that this is not a tax in the traditional sense. Okay. You don't permanently lose it. However, what I always say is that you will never, ever get a full one-to-one back accounting. There's always different tweaks and different adjustments, either between the cost of living components or some of the other changes and components that are in there. So if you know that you are going to be earning a wage before your full retirement age, you may want to go ahead and delay taking Social Security. Again, that's not always the reason. There are plenty of folks, many of you as small business owners, again, where I live in Staten Island, where, they may originally have earned a police pension, a FDNY pension, right? And so you've got a small business to go ahead and keep everything going, but you could take your foot off the gas. You could require it. Those pensions don't impact it, but your small business income does. So this is one of the most important things. It's why when I use the example of my wife's boss, he waited till age 70 because he knew he's going to pass away at his desk. That's his goal, right? So he waited as long as possible to go ahead and take his benefit. But it's a really important thing that if you have a small business, and I'll even double down on that, right? Your spouse's benefits could be withheld as well because of the earnings test. So they look, and again, when the IRS is really in full gear, they look at self-employed individuals to go ahead and see, oh, is, Mrs. Smith really no longer working, or is it an off the book sort of situation, or is it this sort of situation? So they do look at those different aspects. So again, really important to understand what your dynamic is going to be, why you're looking to claim at the age you're looking to claim, and when you're looking to claim at the age you're looking to claim. Okay. But just know, especially as a business owner, that married dynamic can actually come into play and it can be reviewed. Okay. I spoke a little bit about this earlier when talking about the pension income, is that your Social Security benefits are subject to taxation. Okay. So as you earn over certain amounts, and we list the formula here in terms of we go ahead and combine AGI plus 1/2 your Social Security benefit and any tax exempt interest leads to the provisional income calculation over a certain amount. And this is not a very high threshold. Up to 85% of your benefit is subject to tax. Now, important to note, it doesn't mean that you're taxed at 85%. It just means 85% of the benefit is subject to tax. Put it into number terms. In that $2,000 a month scenario, $1,700 of your benefit is subject to tax. So if you're in, say, the 10% provisional bracket, that means you're going to pay $170 a month in Social Security tax. The other side of this is that this doesn't account for other components that go ahead and drive additional costs, and we'll talk a little bit about that. But in terms of the Medicare supplement cost and some of these other earnings tests, all of these can have an impact. By the way, when you start taking retirement account distributions, even if you wait until age 73 in retirement, that can go ahead and increase the amount of your benefit that is both taxed and the rate at which it is taxed. Okay. Now, going back to the earlier question of some of the proposals that the current administration has made, they have actually tried to talk about, will these benefits not be taxed at all? Again, we have not seen that legislation come to the forefront. Kind of fingers crossed if I'm being truthful and honest. But as of right now, as it stands today, again, your Social Security benefit is subject to some level of taxation. By the way, if you have different vehicles that have non-tax reporting provisions, such as Roth IRA income, income from permanent life insurance, or other tax-free vehicles, you might be able to reduce that reduction, or excuse me, you might be able to provide a reduction on the amount of benefit that is taxed. Okay. So as we get into the home stretch of our presentation today, we've kind of gone through some of the different pieces of Social Security. And what we want to focus on are the real economic forces of retirement, because that drives a lot of our decision. Okay. Little history lesson for folks. And I don't know how many were either actively investing or around during the dot-com bubble, but this chart kind of shows what the NASDAQ Composite Index is. And it's an indicator that we never know whether we're retiring at the peak, at the trough, where along the lines that we could be. But just understanding the importance of having that guaranteed infrastructure that Social Security has provided us. Okay. I certainly know that my business fluctuates with the health of the economy, as many small businesses do, depending on consumer spending habits, depending on, wage increases and changes. So all of these have an impact, but it's just important to note the value of having that stability. One more chart to go ahead and talk about that retirement risk. Again, talking about that peak and trough component. This is a chart about the real S&P 500 return. And again, over time, you could draw practically a straight line from the beginning to the end and know that it's always gone up, but there's always a risk when you're invested. And again, having that maximized income can really impact what your long-term planning is. We break it down into two main economic forces. There's that accumulation power where volatility is actually your friend, because you might be buying in certain dips, riding the increases in the market, and then that distribution power in terms of how we go ahead and effectively spend that money. I use the example of if anyone's ever researched the history of climbing Mount Everest, just as an example, when you think of the negative impacts of climbing, really the tragedies, the loss of life, the injuries that occur, most of those actually occur on the downward swing, not on the upward swing, right? It's usually after they've been exposed to the high oxygen environment, that high level of volatility, if you will, and that as they try to come down and descend safely, that's where they run into the most problems. And that's what we go ahead and try and fix as financial planners. So lastly, when you're talking about retirement, whether you're continuing your business as you go forth, whether you're looking to sit back, find a nice sunny beach to go ahead and relax on a daily basis, there's 5 key risks, most of which we're familiar with in some way, shape, or form, but we've got to go ahead and talk about it. The first is longevity risk. Okay. It is no secret that people are living longer than ever today, and it's a blessing and it's also a curse. Fun fact about Social Security: part of the reason that Social Security's initial age of claiming was 65 was because people had a life expectancy of between 63 and 65. And it was meant for folks to be able to retire with dignity and not necessarily be this sort of government pension that it's turned into today. Okay. But the biggest risk that we talk to with clients is I'm concerned about running out of money, right? I'm concerned that my lifestyle will need to change as I get older, not just because of my health, but because of my wealth. So it's one of the things that we like talking about with clients and helping support them. Second, taxes. Okay. And I'm just going to pretend that everyone's going to raise their hand for this statement. How many feel that we are in a high tax environment in today's day and age? Okay. The truth is we're actually in a historically low tax environment. In the 1950s, the highest tax bracket was over 90%. There are 37 trillion reasons why we have an anticipation that that tax rate will likely change in the future. And it's important to understand what that's going to have an impact in terms of your Social Security income, in terms of your retirement income, and what you can do to help mitigate or even avoid it if possible. Okay. Sequence of return risk, I've spoken about that. We never know whether we're retiring at the peak or the trough, and being able to withdraw money is a much different impact than being able to invest money depending on where things go into the market. I'm sure you probably see that even from your business perspective, understanding the health and movement of the economy. Inflation. Again, this was not a hot button topic until about 3-4 years ago. Now it is on the tip of everyone's tongue. Everyone has noticed that prices have gone all the way up in recent years and have had a significant impact. That has thankfully cooled in recent years. Probably over the last 18 months, it's kind of cooled off. But the cost of goods goes up. Many pensions that we see don't keep pace with inflation or don't change over time whatsoever. We get those cost of living adjustments with our Social Security benefit, but as I said before, they usually don't keep pace with inflation. So it's an important aspect of your retirement plan. And last but not least, the cost of healthcare. It's one of the biggest factors. When we take a look at the US budget, the two biggest factors, number one, Social Security, number two, Medicare. Healthcare costs continue to rise, and the dynamic within the healthcare industry continues to change. On top of that, there is the retirement earnings calculation known as the IRMAA calculation, that may go ahead and actually increase the cost of your Medicare as you're taking distributions from your retirement account. So it's one of those things where we like to go ahead and make sure that our folks are prepared for those changes and how those impacts can have on your financial plan. Again, going back to from a small business owner perspective, if you started your business later on in life, you may have an impact where, hey, my business still continues to grow. I'm earning more income, and it's now actually costing me more money to go ahead and do some of these other pieces, like being able to go ahead and afford healthcare and like being able to go ahead and pay taxes because I've moved into a higher tax bracket. So all these considerations we can help you with. We'd love to be able to sit down and have a conversation with you, but it's important to note these risks in terms of a healthy retirement. So entering in the home stretch, okay? You have questions, we can help. As part of attending this session and as part of that form that you're going to receive, you are entitled to a 1-hour complimentary, no cost, no obligation consultation in which we will go ahead and do an analysis on your Social Security benefit for you. Okay. If there are other topics of which you wish to discuss with us, we're more than happy to go ahead and help you where we can provide you assistance. But we will go ahead and discuss your individual circumstances as what may be the best claiming strategy for you, how you maybe want to allocate your assets. Are there things that you want us to review, such as your pension, long-term care, other health benefits, and things of that nature? But we certainly encourage you, again, no cost, no obligation, a 1-hour consultation, as long as you go ahead and complete that form and send it back to me. Okay. So last but not least, thank you for joining us. Thank you to Bart and Gina from SCORE for putting on this event and getting this out here. It's been a pleasure speaking with you. And Gina, I'm going to go ahead and turn it over to you and see if we get any questions from the crowd.
Sure. Well, thank you. That was very informative. I do not see any questions right now in the Q&A. But I think, it was a lot to digest. And I think there's a lot of concern about the unknown, right? That's really what, it's a prediction of the future of what you want to do. But at least you have some useful information to make a wise decision. We were talking before we started the video about our parents and grandparents didn't really, help us educate on this because they weren't educated themselves. So that's what this is about, is educating you to make wise decisions. So thank you all for attending. As I said, the copy of this presentation along with the recording will be emailed to those that attended today. As well as there will be 2 surveys. So please complete both. I mean, this helps us serve you better. So thanks again for attending. And thank you, Brian, for giving of your time, and helping our clients. So thank you very much. And thank you, everyone. Have a great week. I'm surprised. Oh, we're still recording.
We canceled it. They're not recording.